Hello everyone, good morning, good afternoon, good evening. Myself Tirth, how are you all? Hope so you all are fine. So today I am going to discuss the concept of taxation in case of buyback, which is basically a topic of CA final direct tax. Now before moving forward, please help yourself. The notes is already provided in the description column below. Please download it from the link prescribed. Now moving to the topic, taxation in case of buyback. As per section 115 QA, in case of shares of domestic company, whether it is listed or unlisted, it is applicable after 5th July 2019. Taxation in case of buyback, it is taxed at distributed income, which would be arrived by buyback price minus issue price including premium. Now, tax would be paid at 20%, surcharge at the rate 12%, and health and education cess at the 4%. Now, in case of shareholder, it would be totally exempt under section 10, subsection 34A. Now, if there is a redemption of preference shares, then it will also amount to buyback of shares. Next, section 115 QA not applied to buyback of listed shares whose public announcement has been made before 5th July 2019, as it can be seen that it is applicable only after 5th July 2019. Section 115 QB. Interest is to be paid at the rate 1% per month or part of the month, applicable from 15th day, else SSC will be treated as a SSC in default. Now, next, Rule 40BB, it is buyback rule. Now, the case and the issue price is given. If in the case of shares issued by the company on its subscription, then the issue price would be the amount including premium received by company. In second case, if prior to buyback, if company had returned any sum out of money received, then the issue price would be amount received minus amount. But if DDT under section 1150 is paid by company, then the amount returned is not to be reduced. Now, third point, shares issued under ESOP or sweat equity. The issue price would be FMV of shares or amount credited to share capital and premium, whichever is lower. Now, fourth point, shares issued under amalgamation. The issue price would be amount received by amalgamating company in respect of share. It means any amount received by old company in respect of such shares. Shares issued under demerger by new company. Issue price would be amount received by old company in respect of original shares into net book value of assets divided by net worth of old company. Please remember that net worth would be paid up capital plus general reserve. Whatever resulting amount arrived, it is to be divided by number of shares of new company. In case of hands of demerged company, the issue price would be amount received minus amount as determined here above. In case of sixth point, shares issued or allotted as a part of consideration for acquisition of any asset or settlement of any liability. The issue price would be A divided by B. Now, A means FMV of assets and liability or total consideration or consideration paid on a form of shares to extent credited to share capital and share premium account, whichever is lower, divided by number of shares issued as a part of consideration. Next point, shares issued or allotted on succession or conversion of firm into company or succession or of sole propriety concerned by the company. In such case, issue price would be A minus B divided by C. A means book value of asset minus TDS or TCS or advance tax or unamortized amount of deferred expense receivable. And in case of B, book value of liability minus capital, reserve and surplus, provision for taxation, provision for meeting uncertain liability and contingent liability. Divide by number of shares issued on conversion. In case of 8, bonus shares or shares issued without consideration. In such case, issue price would be nil because it is a bonus shares and it is issued without consideration. In case of 9th, shares issued on conversion of preference shares or bond or debenture stock or deposit certificate. The issue price would be amount received by the company in respect of instrument so converted. In case of 10th, shares held in dematerialized form and which cannot be distinctly identified. In such case, issue price would be amount received for issue of share on the basis of FIFO method. Now, last case. In any other cases, the issue price would be face value of shares because none other than information would be given. Here I conclude the topic. Hope you find this video useful. In case of any query or suggestion, please do comment in the comment section below. Please like and share the video with your friends. Also, please do subscribe to my channel for more of such useful videos. Also, don't forget to click the bell icon to stay tuned and connected with us. Also, you can follow us on social media as per the link given in the description column below. Thank you.